You're 23. You walk into a car dealership on a Saturday morning. Not because you love cars. Because your old one finally gave up. The engine rattled for months. The air conditioning stopped working last summer. Yesterday, it wouldn't start at all. You already picked the replacement. Nothing flashy. Just something reliable enough to get to work every day. The salesman smiles as he hands you the paperwork. This shouldn't take long. You nod. You've saved for the down payment. You have a steady job. You haven't missed a payment on your phone bill in years. You're responsible. Or at least, you think you are. 20 minutes later, the salesman returns. His smile is smaller now. I'm sorry. The bank declined the financing. You stare at him. There must be some mistake. He turns the computer monitor toward you. One number sits in the middle of the screen. Credit score, 582. You don't even know what that means. You ask if you can pay a larger down payment. He shakes his head. You ask if another bank will approve you. He hesitates. They'll probably see the same thing. You leave the dealership in the same broken car you arrived in. But something changed. For the first time, you realize someone has been keeping score. Not your boss, not your parents, not the government. A system you've barely thought about has already formed an opinion about you. An opinion that quietly decides who trusts you before they've ever met you. Over the next few weeks, you begin noticing it everywhere. The apartment application that suddenly requires a larger security deposit. The credit card that arrives with a tiny spending limit. The insurance quote that's mysteriously higher than your friends, even though you drive the same car. The phone company asking for a deposit. The bank offering a loan at an interest rate almost twice what someone else pays. No one explains why. They simply call it based on your credit profile. That's when you discover something almost nobody talks about. Your credit score isn't just a number. It's a silent reputation. One that follows you through life, opening doors before you arrive or quietly locking them without ever telling you they existed. The strange part isn't that it exists. The strange part is how many of the biggest financial decisions in your life are made by people who will never meet you. Because in modern life, your credit score doesn't just measure your past, it quietly negotiates your future. Level 1. No credit. A week later, you decide to check your credit report for the first time. You expect to find mistakes, old debts, maybe even fraud. Instead, you find almost nothing. No credit cards, no loans, no payment history, no reputation. You aren't considered risky. You're considered unknown. And in the financial world, unknown often feels just as dangerous. You apply for your first credit card. The answer arrives 3 days later. Declined. Not because you owe money. Because you haven't borrowed any. It's a strange paradox. You need credit to build credit. But you need credit to get credit. So you settle for a secured credit card. $500 of your own money, locked away as collateral. Every purchase becomes intentional. Gas, groceries, a streaming subscription, nothing more. You pay the balance in full every month. Not because anyone told you to, because you're afraid of making your first mistake. 6 months later, your score finally appears. It's only one number. But somehow, it feels like you've been introduced to a game everyone else already knows how to play. The first lesson is simple. Credit isn't about proving you have money. It's about proving you can be trusted with someone else's. Level 2. The first mistake. You're 25 now. Things are going well. You receive your first unsecured credit card. A higher limit. Better rewards. You feel like you've finally graduated. Then life happens. Your car needs repairs. Rent increases. Your paycheck arrives 2 days late. You tell yourself, I'll pay the card next month. Then next month becomes the month after that. The balance grows quietly. One late payment, then another. 30 days pass. Your score drops. Not by 5 points, not by 10, by dozens. You stare at the screen in disbelief. Years of careful behavior, damaged in a single season. You call the bank. They politely explain that the late payment has already been reported. There's nothing they can do. The interest rate increases. The minimum payment rises. The debt begins growing faster than you can shrink it. That's when you learn another uncomfortable truth. Building trust takes years. Losing it can happen in 30 days. The system doesn't know why you were late. It doesn't know about the unexpected repair or the delayed paycheck. It simply records what happened, not your intentions, your actions. Rule 2. Credit doesn't measure your excuses. It measures your consistency. Level 3. The invisible price. You're 28. The late payments are behind you. Your score has recovered. Mostly. You finally qualify for a car loan. The approval feels like a victory. Until you read the numbers. Your coworker bought the exact same car last month. Same model, same dealership, same down payment. But somehow, your monthly payment is nearly $200 higher. You ask why. The finance manager points to one line on the contract. Interest rate. Your score qualified you. His score rewarded him. Over 5 years, that tiny percentage difference costs you thousands of dollars. Not because you bought a better car. Not because you borrowed more. Because one number quietly changed the price of borrowing. You begin noticing this pattern everywhere. Better scores unlock lower rates. Lower rates leave more money in your pocket. More savings make future borrowing easier. The opposite happens too. Higher rates leave less money each month. Less money makes emergencies harder to survive. More emergencies increase the chance of missing payments. The cycle quietly feeds itself. That's when you realize, credit isn't just measuring your financial life. It's shaping it. The people with the strongest credit often pay the least to borrow. The people struggling the most often pay the most. Not because they're irresponsible, because risk has a price. And the market collects it every month. Rule 3. A credit score doesn't just open doors. It changes what waits behind them. You're 35. Your credit score is now over 780. For the first time, banks don't seem difficult anymore. They seem helpful. Pre-approved offers begin arriving in your mailbox. Higher credit limits, lower interest rates, travel rewards, cashback bonuses, a personal line of credit. The strange part is that nobody asked whether your character changed. Only the number did. The same institutions that once rejected you now compete for your business. That's when you realize something unsettling. Credit doesn't simply open opportunities. It changes how opportunities come looking for you. You decide to buy your first home. The mortgage process feels intimidating. Stacks of paperwork, income verification, tax returns, bank statements. But one number quietly moves to the front of the conversation. Your credit score. The loan officer types for a few seconds, then smiles. You qualify for our best rate. 3 words. Best rate. They sound ordinary, until she explains what they mean. Compared to someone with weaker credit, you'll pay tens of thousands of dollars less over the life of the loan. The house is identical. The neighborhood is identical. The mortgage is almost identical. But the total cost isn't. One number quietly changed the price of the American dream. Years later, you start a small business. You expect your experience to matter. Your industry knowledge. Your work ethic. Your customers. Instead, the bank asks different questions. Business revenue, cash flow, debt, personal credit. You pause. Even your business is still connected to your personal financial reputation. The loan is approved. But you leave wondering, how many entrepreneurs never get the chance to begin? Because a number written years ago followed them into the future. That's when another truth becomes impossible to ignore. Credit isn't only about borrowing. It's about access. Access to homes. Access to capital. Access to opportunity. And access often arrives long before success itself. Then you meet someone who works inside lending, not at a bank branch, at the headquarters. He explains something almost nobody sees. Your credit score is only the beginning. Behind it are hundreds of tiny signals: payment history, credit utilization, length of credit history, new applications, types of accounts, outstanding balances. Each one quietly feeding mathematical models that estimate risk. No employee wakes up deciding who deserves approval. Most of the decisions happen before a human ever reads your name. Algorithms compare patterns, probabilities, statistics, not personalities. The computer doesn't know whether you're kind, whether you work overtime, whether you've spent years caring for your parents. It doesn't know your story. It knows your history. And to a machine, history often looks like the future. At first, that feels unfair. Then you realize, every financial system depends on prediction. Banks don't lend based on hope. They lend based on probability. Insurance companies calculate risk. Investors calculate risk. Lenders calculate risk. Credit scores became one of the fastest ways to estimate it. The problem is that probability isn't destiny. People change faster than reports do. A mistake from years ago can continue speaking long after you've learned from it. That's why rebuilding credit feels so frustrating. Your life can improve in months. Your reputation takes years to catch up. One afternoon, you log into your banking app. You look at your score. For the first time, you don't see judgment. You see feedback. Not a label, a signal, a number that can rise, a number that can fall, a number influenced by hundreds of small decisions made quietly over time. That's when everything changes. You stop asking, "How do I increase my score?" and start asking, "What habits create the kind of financial life that naturally produces a good score?" The score becomes the result, not the goal. The biggest secret isn't hidden inside the algorithms. It isn't hidden inside the banks. It's hidden inside human behavior. Most people think credit is built by big moments: buying a house, taking out a loan, getting approved for a credit card. But that's not where reputations are built. They're built in ordinary months. The bill paid on time. The balance kept low. The unnecessary loan never taken. The patience to think years instead of weeks. Small decisions, repeated consistently, until one day, 3 digits quietly begin opening doors that used to stay closed. Because your credit score was never really measuring money. It was measuring patterns, and patterns have a way of shaping entire lives. Somewhere tonight, someone is opening their banking app, not to check their balance, to check 3 numbers. Maybe they're hoping it finally crossed 700. Maybe they're wondering why it dropped 6 points overnight. Maybe they're seeing it for the very first time. Across the country, someone else signs mortgage papers. Another person drives home in a new car. Another launches a business. Another receives a rejection email they'll never fully understand. None of them meet the people making the decision. Because most of those decisions were already made long before a conversation ever began. Not by emotion, not by instinct, but by a reputation built quietly over years. For decades, people have believed that money creates opportunity. Sometimes it does, but often, opportunity arrives first. A lower interest rate, a larger credit limit, an approved application, a landlord willing to say yes. Each one saves money. Each one creates momentum. And momentum has a remarkable way of looking like success. That's why credit isn't just about borrowing. It's about cost. The same house, the same car, the same education can become dramatically more expensive simply because of the number attached to your name. The system isn't perfect. It can't measure honesty. It can't measure kindness. It can't measure determination. It only measures patterns. Sometimes those patterns tell the truth. Sometimes they leave out the most important chapters of a person's life. A single medical emergency, a lost job, a divorce, an unexpected crisis. Life can change in an instant. Credit reports usually don't. But they do change. Slowly, quietly. One payment at a time. 1 month at a time. One habit at a time. That's the part most people never hear. Your financial reputation isn't built during your biggest decisions. It's built during your smallest ones. The payment nobody celebrates. The credit card you didn't max out. The bill you paid before buying something you wanted. The patience to think beyond this month. Those moments rarely feel important. Until years later, when a stranger you've never met trusts you with hundreds of thousands of dollars because of choices you barely remember making. Your credit score isn't your identity. It isn't your worth. It isn't a measure of your intelligence. It's simply a prediction. One that can improve. One that can recover. One that quietly follows your habits wherever they lead. Maybe today, your score opens every door. Maybe today, it closes more than you'd like. Either way, the next chapter hasn't been written yet. Because the most powerful thing about a credit score isn't the number you have today. It's the one you're slowly creating tomorrow. And that's what makes those 3 digits so powerful. They were never just measuring your financial past. They've been quietly negotiating your future all along.